We're doomed. Doomed.
Commander Noto and SoFi's management team just delivered another strong quarter, beating their own revenue and EBITDA guidance for SoFi Q1 2022. Members, products, revenue, and EBITDA were all up year over year and quarter over quarter. As a SoFi shareholder, we couldn't have asked for anything better. In this video, we're going to look at the key things you missed during the Q1 2022 earnings call and why the stock still plummeted despite the truly amazing call. The positive numbers on their Q1 2022 earnings report aren't being reflected in the stock price, as SoFi hit another all-time low of $4.85 per share. SoFi, the company, is improving so much and at such a fast pace, and yet the stock price is going in the opposite direction, which reminds us of when Amazon's Jeff Bezos went through the same thing.
And so as I watched the stock fall from 113 to 6, I was also watching all of our internal business metrics, number of customers, profit per unit, everything you can imagine, defects, etc. Every single thing about the business was getting better and fast.
If you're panicking, looking at your stock portfolio with tears in your eyes and your fist clenched, questioning why you invested in SoFi in the first place, then this video is for you.
Stop! He's already dead.
Watch until the end of this video. You don't want to miss any of this. We're not financial advisors, and this is not financial advice, so always do your own due diligence. Also, if you haven't already, make sure to check out our SoFi Investors private Facebook group, which will be linked in the description and the top pinned comment. SoFi is still killing the game with its members, totaling up to 3.9 million this year. SoFi is breaking records once again as it achieved its third highest member growth ever since SoFi's inception. Up by about 70%, SoFi seems to be doing well considering it had just 2.3 million members last year. On top of that, members took their shot and used more than 689,000 SoFi products in the first 3 months of 2022. Its second highest growth in products ever. If members are up by about 70%, total products are up by 84%. Let's take a look at how the other fintechs are doing. Robinhood had its fifth consecutive quarterly drop. Revenue declines 43% to $299 million for a total loss for the quarter of $392 million. And apparently, the user base also took a hit. Sheesh. Well, there's good news and bad news. The bad news for the fintech space is that Robinhood is in a downwards free fall and losing a ton of members. The good news, however, is that SoFi offers investing in their platform so they could take more of that sweet market share. You know what they say, a satisfied customer is the best strategy of all. Let's take a deep dive into SoFi's business segments, the financial service segment, lending segment, and technology platform. In SoFi's financial services segment, total products are up by a massive 111% when compared to last year, from 2.2 to 4.7 million products. It seems like more people are using SoFi's great products. Among them, SoFi Money nearly doubled year over year, followed by the SoFi Invest and Relay products. SoFi's tech segment managed to achieve a 58% year over year growth, totaling up to 109.7 million products used by both new clients and the existing ones. But aren't you a little curious about the lending segment, aka where the student loans belong? Lending products are still up by 20% year over year. SoFi's most controversial segment is still on fire and earned a whopping $244 million in adjusted net revenues. But just hours before the announcement of SoFi's record-breaking growth, its stock hit another all-time low. And the reason? Some speculate it's because of the early earnings leak. Some, well, it could be because of its fintech peer Upstart. In our opinion, here at Wealth Gambit, it could be a combination of all three, but we think it's just the market. Even the best swimmers can't outswim the tide. Upstart released its Q1 2022 on May 9th, a day before SoFi's Q1 2022 earnings. And after the company cut its revenue guidance for 2022, Upstart stock was down by more than half after trading hours.
Let's start with the downturn at Upstart. I was looking for a better pun, can't find it right now. The fintech lender is slashing its full year forecast to $1.25 billion in revenue compared to its prior forecast of $1.4 billion. And guys, this was a brutal quarter. Look at this market reaction. When I saw these results hit the tape last night, stock was down about 43%. You're seeing the sell-off just continue in a big way here.
Upstart wasn't the only one hit, but also its fintech peers like SoFi and Lending Club. With Mr. Market acting the way he is, investors are on the edge, and rightfully so. After all, most investors are down multiple double digits. Mizuho Securities analyst Dan Dolev talked during SoFi's earnings call and asked what people are misunderstanding about the SoFi stock in comparison to its competitors. This is what Anthony Noto had to say about this.
I think the biggest difference between SoFi and all the other, call it Fintech 2.0 companies, moving Square and PayPal out of that equation, so the more recently public companies. The biggest difference is we're building a one-stop shop with a broad suite of digital financial products for our members. We're trying to build a lifetime relationship with them to be there for every one of the major financial decisions in their lives and all the days in between. And we're doing that through a vertical integrated model so that we have best-of-breed products from the consumer standpoint, but also best-of-breed unit economics. And that'll allow us to have a competitive advantage. And as we build that vertical integration, we're building technologies that we're turning into businesses as we have with Galileo and Technisys. And that results from a financial standpoint with a highly diversified business. Within our lending segment, we have 4 different types of loans. We're not just in personal loans, we're also in student loan refinancing, we're in school loans, and we're in mortgages. Within the technology platform, there's 2 primary businesses there, but there's more to be added in Technisys and Galileo, and they're incredibly complementary. It's a very high margin business, accelerates our rate of innovation, giving us a low cost advantage, and giving us a return on our own technology development and lifting the book, all boats for the industry. And our third segment, the financial services segment, is highly diversified with SoFi Checking and Savings, SoFi Invest. Even within SoFi Invest, we're not just in crypto, we're not just in single stocks, we're also in ETFs, we're also in robo accounts. And then we have a credit card, which over time will build out that portfolio. We have one today. We also do insurance as a lead generation business. We have the Lantern and Relay businesses. So we're very diversified. And one of the biggest reasons why we've been able to navigate the challenges of the last 4 years, and there have been multiple challenges every year, whether it's economic or industry related or credit related, is because we have that diversification and can reallocate our resources to where the best growth opportunities are. And that's why we continue to deliver record revenue despite the negative impact on the student loan moratorium. The last big thing I'd mention, and Chris will give you the details, is we're going after a high-end customer, mass affluent, high net wealth individuals that have a great credit profile, high income, and they need the products and services that we develop, and most of the big banks have walked away from that broad suite of products. They don't offer mortgages, they're not in brokerage, or they don't have personal financial management, or they don't have career advice. And so, that results in us having a pretty diversified business. We've been EBITDA profitable for the last 7 quarters, and we're on our way to being GAAP profitable, and we're generating positive cash flow from EBITDA less CapEx and building our book value. And we have substantial book value. But that's the sort of biggest way to describe how we're positioned. I'll have Chris give you the details on our income and our credit profile. Yeah, thanks, Dan.
SoFi's revenue for Q1 2022 is $322 million, which is up 49% year over year. This is a hard number to comprehend. Literally, imagine getting a 50% gross raise at your job just like that. They also reported a $9 million adjusted EBITDA, which according to their earnings report is the 7th consecutive quarter of positive adjusted EBITDA. Both of these numbers exceeded their revenue and EBITDA guidance for Q1 2022. Here's SoFi's CFO Chris Lapointe talking about SoFi's revenue and EBITDA guidance for Q2 2022 and for the full year of 2022.
Throughout the last 12 months, we have demonstrated the benefit of having a diversified set of revenue streams and a keen focus on continuing to underwrite high-quality credit. We expect those benefits to persist going forward, particularly in light of the existing macro backdrop. For Q2, we expect another strong quarter of growth with $330 to $340 million of adjusted net revenue, up 39 to 43% year over year, and expect $5 to $15 million of adjusted EBITDA. For the full year of 2022, we are raising guidance and now expect to deliver $1.505 to $1.510 billion in adjusted net revenue, exceeding our recently provided full year guidance of $1.47 billion, and expect to deliver adjusted EBITDA of $100 to $105 million above our recently provided guidance of $100 million. Overall, we couldn't be more proud of our Q1 results and continued progress.
And to all investors currently panicking today, here's Chris Lapointe talking about how well capitalized SoFi is.
The recent opening of SoFi Bank only reinforces the strength of our balance sheet and provides us with more flexibility and the ability to further lower our cost of capital. In Q1, our balance sheet grew by approximately $3 billion, and that was driven by three factors. First, cash equivalents, and restricted cash increased by approximately $900 million, primarily as a result of an increase in pledge activity to capitalize the bank, as well as increases in deposits at SoFi Bank, which totaled $1.2 billion at the end of the quarter. Second, loan balances grew approximately $1.2 billion as a result of holding loans for a slightly longer period of time. And third, we had a $900 million increase in goodwill and intangibles related to our acquisition of Technisys. We exited the quarter with $2.8 billion drawn on our warehouse facilities, which is approximately 40% of our overall $7 billion of capacity. Our current book value is $5.5 billion, and our capital and leverage ratios are extremely strong, both at the bank and at the bank holding company level.
A special shout out to everyone in our Patreon community. You guys truly help to make these videos possible, and we really appreciate all your support. Shout out to Arthur Magazu, Wei Chu, Pietro Serra, Daniel Corbett, Mr. Welfare, Casey Patel, Jeff Sherman, Gregory Villar, Bo Park, Denzel, Shonda, Reginald Davis, Les Broadway, Christian Cardelphi, Kevin Beaufriend, and J-Bone. Also, shout out to everyone who likes these videos, watches, and comments. It truly helps a lot with the YouTube algorithm, so we thank you. If you found any value in this video whatsoever, smash that like button and subscribe if you haven't already. Follow us on our social media platforms at Wealth Gambit. And just a quick announcement, we have turned our SoFi Investor Facebook group into a private group just so we could all rest assured that spam accounts don't enter the group. For those of you that still haven't joined, you could still join by answering the questions we've provided. We just want to make sure you're not a robot. Thanks for watching. We greatly appreciate it. And until next time, peace.